John, in recent months, there's been a lot written about and investment products developed around the concept of ESG investing. Can you explain what ESG investing is and what makes this different than any other socially conscious type of investment?
Well, I mean, that's exactly what it is, socially conscious.
Right, but they've been around, socially conscious has been around for a while.
ESG stands for environmental, social, and governance, right? So it also goes by the terms responsible investing, sustainable investing, call it what you will. I mean, ESG is a screening technique, right? Or maybe I should say it's a screening process. Now, you're right, socially conscious investing's been around for decades, but leave it to Wall Street, right? And the product manufacturers to latch on to something that becomes popular or is popularized either through the media or through political channels. So ESG, in the term that I use, the letters ESG really pertains to a type of pooled investment. It might be a mutual fund, it might be an ETF that uses a screening process. And the concept is fairly simple, right? I mean, don't invest in companies that pollute or serial polluters. Don't invest in companies that are socially irresponsible, either to their employees or maybe they, deceptively work to the detriment of society. Don't invest in companies that don't have good corporate governance, where maybe a CEO is left to their own devices to do whatever they want. So
the board of directors as well, right. Well represented by.
Right. So, I mean, like you said, I mean, ESG has been around for 30-something years. Now, the truth is that there is a lot of research, empirical research, academic research, that does show that companies that have strong ESG scores, if you will, in those three areas, tend to have better profitability over time. And if you tend to have better profitability over time, you tend to have a better stock price over time. You also tend to have maybe narrower tails, right? Lower risk instead of fat tails and higher risk. I'm going to be a little bit heretical here and say but. And the but really, as far as I'm concerned, speaks to the more the pursuit of ESG or the promotion of ESG, because I don't necessarily think a lot of investors realize that academic research doesn't always translate well when you put it into practice. And I would add, with the rise of sort of the political rancor, right? What is politically correct versus what is a provable investment thesis going forward? And so, one man's, polluter may be another woman's company that's got a female CEO and half the board is female or something like that. That they may not jibe. We've seen plenty of evidence out of Silicon Valley in recent years. And Silicon Valley, I would add, tends to promote themselves and view themselves very progressive, right? There's a company that has in their employee manual the term "don't be evil." This same company paid tens of millions of dollars to former executives embroiled in sexual harassment claims on the way out the door. I mean, that really doesn't jibe with the "don't be evil" thing. There are Silicon Valley companies, both newly public companies and companies that went public some years ago, really have corporate structures or board of director structures that don't necessarily facilitate looking out for the best interest of the shareholders, which is the role of a board of directors. So, is there independence on the board? Is there a lot of independence on the board? Is your brother on the board? Do you own an exorbitant number of voting shares, so that you are not only the CEO, or you perhaps are the be-all, end-all as far as all decisions are made moving forward. So there's a lot of conflict there. We think the research that shows companies that generally pursue strong ESG characteristics, on the whole, the research is correct. But it does sometimes tend to fall apart when you kind of parse and figure out, well, what's your real criteria? I don't think necessarily everything is that cut and dry. Another case in point, people who want to pursue green energy. Well, there used to be a lot of solar companies here in the U.S. that offered the opportunity to invest in green energy some years ago. Not anymore. The flip side is that I think it's $260 billion was spent last year in alternative resource research by big oil companies, the fossil fuel companies that everybody seems to hate. So who's going to really come up with the answer to some of the questions that vex society today? I don't think, in today's political world, everything gets reduced down to soundbite, but unfortunately, it's really tough to pick investments that way. Sure. I would just add one last thing, that there was a report by the Pacific Research Institute. It came out last year, and they looked at the 10 top sort of ESG funds, all with a 10-year track record. And while we can't predict the future, I would point you to the report, but the illustration is pretty clear that just because you have the ESG moniker doesn't mean you're going to do any better than the S&P 500, despite what the research says.
John, thanks. As always, your comments are very succinct and to the point, and hopefully we hit a lot of points that our clients are interested in and been asking about over the last quarter. So thank you. We hope you enjoyed it. As always, if you have any questions or there's something specific you'd like to hear from us, please speak to your advisor, and we're more than happy to accomplish that. Thanks.
Thank you.